Hi, good morning, everyone. My name is Joel Davis, and my student ID is 214308166. So today I'm excited to share with you my insights how digital currency are being accounted for under different framework, especially focusing on International Financial Reporting Standard (IFRS) versus generally accepted accounting principle (GAAP), and how these are applied in real world scenarios. So let's start with the introduction. So virtual currencies like digital currency, for example, cryptocurrency, are complex to account for because of factors like high volatility risk, no certain legal framework that governs them. And also, they do not fall under conventional business classification. So, such currencies work beyond the established financial constraints and provide challenges to implementation of rules such as IFRS or GAAP. IFRS has to be globally harmonized as it offers a structure of digital currencies. Their recognition, measurement, and disclosure will look in different region. So failing to harmonize them, there is always a possibility of difference and confusion in terms of financial report, which affect the investors, regulators, and all other stakeholders in decision making. This presentation constrained IFRS with CAP in order to consider how various jurisdictions account of digital currency and where they are alike and distinct. Also, it consider real life cases of accounting policies with regards to how some firms in various nations are currently reporting digital asset. The paper will also further to discuss the theory like fair value accounting, historical cost accounting to show the direction that these standards can go if ever they need to consider the feature of cryptocurrencies. They are mean of analyzing the existing possibility, influence, or further development of the accounting standard and further suggestions for convergence of worldwide. Knowledge of these dynamic in which is vital in enhancing the believability of financial statement in depicting the economic position of entities involved in the use of digital currency towards enriching consolidation and transparency of global financial market. So let's compare the IFRS versus Indian GAAP, IFRS and GAAP of Australia and India. Sorry. So while we are comparing the cash and cash equivalents, they are like almost same under even history of accounting standard, but there are difference present. So as per both IFRS and Indian GAAP, cash is derecognized at almost the same value. However, IFRS prefers the fair value, while the Indian GAAP has a preference for the nominal value. Cash equivalents are also similar defined by the standard, which are highly liquid investment with a maturity of 3 months or less from purchase in order to convert them to cash at minimum risk of fluctuation in the value of investments. If it relates to the intangible asset, then IFRS as well as Australian standard allow the entity to use the revaluation model and allow asset to reflect in fair value, but where there is an active market. On the other hand, there is Indian GAAP, which has laid some major specific rules and regulation in most cases. So, in intangible assets are required to be stated at cost, less accumulated depreciation and impairment loss. The revaluation model is strict in use. In any these standard, there is no specific digital currency. As such, they fall under others section such as asset, for example, intangible asset or stock depending on the usage. This lack a specific approach leads to differing classification and measurement while giving a conservative idea of new financial instruments within the current framework. So while we are going to the real world scale study of Bitcoin and Digital Ads Limited, there are two existing Australian firms in this new economy of digital currency in industry, and their 2023 financial statement provide useful example for how to apply accounting standard to digital currency. So these report shows how each of these of companies came to account for digital currency and uncertainty and contortion required to fit them into existing paradigms, including the IFRS and GAAP. Both companies are struggling with such issues as classification, valuation, and reporting of digitally counted assets such as Bitcoin that cannot be categorically accommodated under conventional accounting standard. So for instance, Bitcoin Group further elaborates on criteria on how it categorizes its digital currencies as their inventory or indefinite lived intangible asset based on the company's plan of utilizing them. On the other hand, the case of Digital Edge Limited may pursue a differential strategy for categorizing its digital asset by liquidating and market trend, but that affect the value of financial reporting of such asset in the statement of financial position. For the financial statement, one can distinguish the inconsistent approach to the valuation of digital currency, recognition of revenue or asset impairment. The strategy adopted by both the Bitcoin Group and Digital Edge Limited show that the industries are facing these problems today, and yet the practices may vary. It remains currently unsettled and in a state of constant change in terms of accounting for digital currency, while companies continue to make efforts to conform to the existing standard and at the same time accommodate the peculiarities of these financial assets. It is important that stakeholders gain awareness of these practices so that they can better appreciate broader sensitivities for future accounting standards and financial reporting. So while we are going for the comparative analysis of Bitcoin and digital currency, it is seen it is seen that the both companies in digital currency business where the basic strategy when it comes to the providing the use of digital currency on the balance sheet is quite similar. For example, both companies classify digital currency like Bitcoin as intangible asset because under certain accounting standard, the determining of intangible asset depend on the absence of physical characteristics and their potential to generate further economic benefit. However, there are like a noticeable variation in the concrete way the method each of the companies in question work out and estimate these assets. The cost method could be used by the Bitcoin groups to drive the digital currency where they are initially recorded at cost and then tested for impairment if there is the fair value is lower than the carrying value. On the other hand, Digital Edge Limited could apply the revaluation model through which fair value is adjusted from time to time with the change recording in other comprehensive income. These distinction in measurement methodology affect how the revaluation of digital asset is done. For instance, gain in Bitcoin group may only be marked as realized gain and only recognized upon disposal, while digital as limited may record gains and losses due to fair value changes over time, impacting its performance. These diverse practices demonstrate substantial difficulties companies experience when implementing accounting standard to digital currency or lack of clear rule calls on companies to come up with single standard. So while we are going to the theoretical framework, The institutional and or institutional or positive accounting theory provides a proper approach to understanding why some accounting treatments are chosen for digital currency by different companies. So it is argued that choices made by the companies regarding the accounting policy are depending upon economic, social, and institutional contents of the company. It presupposes that firms choose their accounting standard with technical precision, but proactively to optimize their financial performance, minimizing their taxation and over satisfying regulatory requirement. So the application of this theory in the contents of ACC enable one to explain the individual approach of company and their peculiar activity as well as their strategy and regulation expectation. So for example, Bitcoin groups and digital assets limited may use different methods for measuring and valuing their digital asset because of fundamental difference in business strategy, customers' expectation, or legal environment. Bitcoin group might use like a post mode to avoid such frequent fair value adjustment and their consequence in terms of viability. While digital ads limited might sorry as a result, we can put forward an understanding of how and why digital currency accounts may vary over time by applying institutional or positive accounting. Accounting, positive accounting theory. It assists in synthesis of academic research and actual financial positioning process by offering building conception that will assist in explanation of outcome of particular accounting choice. So it allows analyzing the information regarding the further development of accounting practice in relation to constant and steady integration of digital currency in sphere of enterprise. So we can conclude that the noticeable inconsistencies in accounting of digital currency highlights the critical needs of comprehensive overhaul and harmonization of global standards. While digital currency include Bitcoin become like a widespread measuring the standard need to be supplemented, creating problems for both financial reporting and investors. For instance, variation of measurement characteristic valuation approaches and management of gains and losses may impact the financial performance and condition of entity engaged in digital currency. So such variation underscore the important message that future development in according standard must achieve a balance between flexibility and comparability. While adopting the developed standard in context of digital currency, it is necessary to consider its specific features in relation to digital currency. But at the same time, take into the account the harmonization of undertaken work at the international level. This balance is essential in ensuring that users of financial statement have comparability of figures in financial statement, hence erecting opens and mistrust in financial reporting. It is vital that continuous research is being conducted and also close cooperation of regulators, companies, and academic in the accounting field. Together with this, such group can create guidelines that may target such as specularities in digital currencies as opportunity that cause the development of ten, ten, new according 10 days. Such collaboration will not only set the foundation of a more integrated AI-based system for accounting for digital asset to increase the accuracy of financial reporting, but also facilitate the adoption of digital currency at the international level. So this is my presentation. Thank you, everyone. I'll just add some reference for the assessment. Thank you.